The data to date does not include that OpenAI round. We can get to it, but summarize the PitchBook data as of third quarter.
Right, it does not include that OpenAI deal, but what we've seen is that venture still continues to be a really slow market. When you look at exits and you look at fundraising, you can really see why that is. There's nothing coming out of the market right now. And so in the US during Q3, there's about $37.5 billion invested, which is lower than the quarter before, but that had a few large deals. But there's nothing really exciting happening outside of AI in terms of investments being made right now.
Where is the excitement happening in AI from a geographical perspective, Kyle?
Right, it's happening in San Francisco, it's happening here in the US, right? If you look at OpenAI, I think the deal that just closed shows two things. One, it shows the incredible amount of capital that AI needs and the cost that these companies are incurring. And it also shows the excitement around AI and the technology, right? If you look at who is in that, NVIDIA, Microsoft, Thrive Capital, SoftBank, all these investors are looking at this deal and this company as something that's going to be able to provide them huge returns moving down the road, right? And that's how many of these investors have looked at AI, up and down the venture life cycle. And so that has definitely been the area of interest for investors, in the US and globally up to this point.
So if we go on the basis that the data we're showing on the screen as of September 30th does not include the OpenAI round, how does it change the trajectory for 2024 against prior years when we do take that round into account?
Yeah, right. I mean, I think we can look at it and say, yeah, and obviously is going to make 2024 look much better. But if it's only one deal, it's not really capital available for the entire market. And I think that's something we've been saying with past quarters rounds of CoreWeave or Anthropic. These are very exciting, interesting, scaling companies. But that's not what the rest of the market is seeing, right? Valuations in AI are 40% higher than in other verticals. Deal sizes are much larger. Obviously, $6.6 billion is not a typical deal that many of these companies should expect anytime soon or ever. And so when you talk about the trajectory of the dollars going into the US or the global venture market, I think that really needs to be taken into account.
What unplugs for the rest? If you're not AI native, but you're AI adopting and you've got a decent run rate in terms of revenue, do we need more exits to be able to see the money come back in?
Yeah, right. I mean, exits are still the kind of dam of the venture activity. When we look at distributions that are coming out of the market, we know that there has been very, very little for the past 2 years. Even the IPOs of Q1 and Q2 we're not able to sustain the venture market. And so when you take how large the AUM has grown for VC in the past few years, then just consider that all of that is stuck private and LPs have no way to use that cash for more investments or to recycle it back into venture. You can really start to see why there's such a slow market over the past few quarters and something we should expect for the coming quarters as well.